Good morning part, which is based on the investment opportunities in India for NRIs in present day. Before we move on for the core presentation, let's start with the introduction of company and today's first speaker, Mr. Dakshish Kothari, and then we will start the core presentation. Kindly post your questions in the chat box, and those questions will be answered by the speaker after the core presentation. Thank you.
60 years back, late Mr. Dinesh Kothari started a firm in the name of Messrs. Kothari and Company to provide tax and allied laws advisory services. Later in the year 2001, the activities of the firm got expanded into a corporate entity in the form of Ashutosh Financial Services Private Limited. Over these years, the company has emerged as a prominent player in the field of finance and taxation. The company operates with a quality management system certification of ISO 9001:2015 and is now a complete financial services solutions enterprise. Ashutosh Financial Services Private Limited is presently serving in the fields of investment services, insurance services, NRI services, income tax and estate planning services. Investment services, which is in the activity of connecting people with investment opportunities for Indian markets. Mutual funds for equity, debt and hybrid funds. Portfolio management services for equity shares. Alternative investment funds for listed and unlisted equity shares. Equity shares of unlisted companies. Advisory stock portfolios for curated portfolios of equity shares. Bonds, that is tax-free bonds, taxable bonds and capital gain bonds. Fixed deposits of top-rated corporates. Precious metals through sovereign gold bonds. For investing in global markets through mutual funds, equity shares of foreign companies and ETFs, and precious metals through ETFs. Insurance services by the company is provided by Ashutosh Insurance Brokers LLP, which provides insurance solutions for life insurance for life risk coverage, health insurance, mediclaim and personal accident, insurance of assets for all types of risks, insurance for liabilities, retirement and pension planning needs, and investment through insurance for guaranteed returns and ULIPs. NRI Services is a one-stop solution for NRIs to address the needs of investments in mutual funds, PMS, AIFs, unlisted stocks, foreign equities and advisory stock portfolios, insurance for life risk, health, assets and liabilities, retirement planning and investment through life insurance, complete planning and compliance for Indian income tax, advisory under FEMA and RBI regulations, estate planning for Indian assets, and complete support for compliance related to foreign tax laws in respect of Indian incomes and assets. Income tax and estate planning services works as advisory and compliance for income tax, estate planning, endowments and charities. Our company is a unique setup which is truly a one-stop solution for all the financial and taxation needs of the client. The company enjoys a state-of-the-art infrastructure facility having its office in the middle of Rajkot city, spread across 4,000 square feet area consisting of separate setup for each division. The company has a fine mix of personnel from financial and legal background like chartered accountants, lawyers, certified financial planner and management graduates to form a dedicated team of skilled and qualified staff. The team works under the dynamic leadership of Mr. Dakshesh Kothari, who is the MD and CEO, and Mr. Rajit Kothari, who is the Executive Director of the company. All the divisions and departments manage their operations with high-tech versatile softwares, and the entire IT infrastructure is connected with integrated file server for seamless exchange of data with security and regular data backup facility. The company has a fully equipped conference room with projection and video conferencing facilities, which makes dissemination of knowledge, information and interaction convenient. The company has its offices at Ahmedabad and Mumbai to facilitate the clients. The company website www.ashutoshfinserv.com and mobile application Ashutosh Finserv gives an overview of the happenings in the world of finance and is also a useful client user interface. We operate multiple investment management softwares for managing our clients' investments, having interface with our website and mobile app. With the help of our website, reporting software and app, our clients can carry out complete paperless investment transactions and can have access to their investment portfolios on real-time basis. We regularly update our clients with latest happenings from the world of finance and taxation through digital mode of interactions using YouTube videos, WhatsApp broadcasting, social media that is Facebook, Instagram and LinkedIn. The company has been conducting presentation on analysis of the Union Budget since last 17 years, organizing series of presentations for non-resident Indians on aspects of taxations, regulations and investments since last 5 years, and the company is also arranging presentations for various sectors of economy and society by covering topics of vital importance related to finance, taxation and estate planning. The company serves to more than 3,500 satisfied clients spread across the world and is actively maintaining business relations with many clients and groups for more than 60 years. Ashutosh Financial Services Private Limited is growing as a complete financial solutions enterprise with its presence felt not only in India but also globally. Mr. Dakshesh Kothari is a tax and financial consultant and the Managing Director and CEO of Ashutosh Financial Services Private Limited, which is an ISO 9001-2015 certified company with prominent presence in the field of financial services. He specializes in the fields of income tax, FEMA, trust laws, estate planning and foreign tax compliances. On the financial front, he specializes in investment services and insurance services. He advises companies, trusts, high net worth individuals and non-resident Indians across the globe on financial and tax and allied laws related matters. He is a trustee of various charitable trusts. He has been involved with a number of social service projects of Rotary Club and is a Paul Harris Fellow of Rotary International. He has been presenting analysis on the Union Budget since last 16 years. He has been delivering series of presentations on taxation, regulations and investment aspects for non-resident Indians since last 4 years. He has also been addressing doctors, businessmen, industrialists, taxation consultants, chartered accountants, company secretaries, NRI and postgraduate students of diverse branches on subjects relating to finance, taxation and estate planning to make our society financially literate. His articles on financial subjects are regularly published in renowned newspapers like the Economic Times, Mint, etc. and also in magazines like The Lal Street. His interview was aired on ET Now as a mutual fund industry expert. in the program named Swatantra, which is one of the most acclaimed investor education initiative of our country. He has also addressed a program dedicated to NRI on a leading Gujarati TV channel in Ahmedabad. He is a 360-degree versatile personality in the fields of taxation and finance, which makes him a unique and truly a one-stop solution provider for wide
Hello, everybody. At the outset, I would like to welcome you all at NRI
Sir, your
Financial
voice is
Conclave.
not audible.
Okay. Now I'm audible. Now I'm audible. Okay. At the outset, I would like to welcome you all at the NRI Financial Conclave 2022, Season 6. And in this season, in the first video presentation or the Zoom presentation, we had talked about the taxation and the regulatory aspects. And in this presentation, we are going to touch the investment aspects, which definitely all the NRIs would be very much interested to know all about. So in the first part of the presentation, which I am going to deliver, what I would like to deliberate on is the current Indian investment landscape for NRIs. So first we will try to understand how the Indian investment landscape is behaving as of now. And in the second part, Rajiv Kothari will take it forward in terms of how we can take the advantage of investing in India and what could be the appropriate products. So in the first part, when we talk anything about the investment landscape, the first and foremost thing that needs to be addressed is why should an NRI invest in India? So all these years, what happened was that the NRIs used to invest out of several considerations. And the paramount consideration was that their love for their motherland. They always felt that this is my home country. I should make at least some allocation of my savings investments into a country which has given me so much. Now that is always true and that always holds. But now the purpose of investing in India is not only something which an NRI would be interested in out of those reasons of affection, but out of pure reasons of economic consideration. And that is what is coming up for not just the NRIs, but for all the non-residents and all the investors who are stationed outside of India. And I will run through a few slides which will speak in itself and make it clear as to why should an NRI invest in India. The first and foremost and the most important thing when anybody is investing in a particular economy is what is the growth potential of that particular economy. When we look at the top 20 economies of the world, according to International Monetary Fund, the way it has been estimated is that in the year 2022, this is the kind of growth trajectory that all these top 20 economies of the world are going to witness. And if you see in the table, India is going to grow at a rate of 6.8%, and country like the USA is going to grow at a rate of 1.6%. And a country like China, which used to grow for several years, for several decades, at a rate which was a double-digit rate or somewhere near it, is going to grow at the rate of 3.2%. So India is practically on the top of the table when it comes to the growth rate amongst the top 20 economies of the world. Then the another aspect which we need to look into is that whether this growth rate is going to remain sustained, or there are situations, there are changes which has happened, and on account of that, this growth rate is going to slacken or slow down. Here I would like to point out, and the statistics which I have tabulated is that the rate of interest, the repo rate, the rate at which the central bank of the country should I continue? Okay. The rate is just 5.9%. While as if you see in the United States of America, on 1/1/22, the central bank's lending rate was 0.15, and today it has escalated to 4%. So the net result is that the interest rate in the US has escalated phenomenally and times. So what is happening is that deliberately US is trying to make up the interest rates in the manner that the economies is less pumped with capital and the economy slows down a little. The reason for them is very clear, that they want to contain inflation. But as a fallout of that, what is going to happen is that the country's growth is also going to suffer, and there is an expectation that there might be a recession which might come up on account of this. While as in India, the rate of interest has increased, but not to that extent. And first time in my lifetime, I am looking at an interest rate for any borrower in India and the borrower in USA, the differential is just 200 basis point. In earlier times, India had interest rates of say 10 and 12%, and in the US, people used to borrow at 1 and 2%. Of India. Then, as a store, sorry, yeah.
Dakshish sir, it seems that now everything is fine. You can
Okay.
please continue.
Yeah, sure. I would. And this is a very interesting part of the presentation. Uh, so as I was saying that the winds of change are blowing, and these winds of change are blowing in favor of India, and the world and the Indian investors, the global investors and the Indian investors are quite appreciating that fact. And if you see the statistics of the stock market performance of the top 20 economies of the world from 1/12/21 to 1/12/22, which is last 1 year, the Indian stock market is appreciated by 8.25%, the BSE Sensex, while as the USA S&P 500 has declined by 10.86%. So India is on the top of the table when it comes to the stock market performance. And this is the way, as I said, the global investors are looking at India and the Indian economy. Next. Okay. Now, one another phenomenon which is happening across the globe is that there is a steady depreciation of all the currencies across the globe vis-a-vis the US dollar. Now, if we look at the table of the currency depreciation across top 20 economies of the world, we can see that the Indian depreciation of the Indian rupee vis-a-vis the US dollar is at an Should I go ahead? Okay, fine. Sorry for the inconvenience, little technical snacks. So, as I was talking about the depreciation of the currencies vis-a-vis the US dollars in the top 20 economies, India stands in the middle of the table when it comes to the depreciation of the Indian rupee vis-a-vis the US dollar. So, these are the trends. So, these are the trends which are broad trends. These are the broad trends under which the Indian economy is right now performing. To come is at a comfortable level, and the overall scenario of growth is also something which is a comfortable scenario. Now, let us look at the aspect of what is the scenario in particular in respect of equity investments for NRIs. Now, we all know that equities or the benchmark indices are the barometers of the way the economy is functioning. When we look at this barometer, it seems that here is an oasis. India is an oasis in the ocean of despair. We all know the regions of despair. The entire Western world, the entire developed economic bloc is in a state of despair, as we all know. India, on the other hand, is on a track which is quite encouraging. The first and foremost thing which has changed in India in the recent couple of years is that manufacturing in India is on a revival path. The reasons for it are obvious, that China's relations with the rest of the world has propelled India as a source of supply for the major global supply chains, and also India's relationship with China, which has led India to think for self-reliance, which in Indian terms to becoming Atmanirbhar. Chinese economy, as we know, has become a stop-start economy. Within no time, the economy would start, but in no time, it might stop for the reasons which are quite strange at times, which says that on account of a few COVID cases, for some other reasons, for reasons of environment concerns, reasons of some government-related regulatory aspects. So it is now branded as an economy which is like a start-stop economy. When it comes to services as an engine of growth for India, the IT-enabled services, which acts as an IT backbone for the entire world, is something which is very much in place, in shape, despite the fact that the information technology related companies in the Western world have been severely impacted. The prices of the stocks of the Indian ITES has also corrected, but the fact is that their performance, their results are not impacted in the manner the Western IT technology companies have been impacted. Contact-oriented services have seen a very strong pickup. Tourism, travel, all those sectors, hotels have seen a lot of pickup. Capital investments by government and the private sector is increasing. Today, India is on a feverish pitch of building its infrastructure on roads, rails, air, and even the digital infrastructure. And the government is investing very substantially on these capital investments. And even in the COVID times, when the government wanted to put money in the pockets of the people to see that they have got enough money to survive, monies were not given for free. Monies were spent on projects, monies were spent on things which would create a certain amount of value. Another very encouraging thing which has developed in India is that the government finances are in a very good shape, for the reasons that India's tax to GDP ratio is on a constant improvement. Direct taxes and indirect taxes collections are increasing year on year, month on month, quarter on quarter. And this is on account of increased compliance by all the taxpayers, on account of the way the entire governance of the country's finances and the tax machinery is placed by the present government. One more interesting thing which has happened, which is a strength for India, is that India's policies for external political relations have been quite strong, where India is capable of buying cheap Russian oil and still having good relations with the Western world, to the extent that India can exercise, or India can have a joint military exercise with the US, and at the same time conveniently buy cheap Russian oil to protect their economic interest. The way COVID was handled in India medically and with financial prudence is something which is helping India a lot. Last but not the least, on the series of points which are in favor of Indian fundamentals is a very robust IT backbone which has been created in India in terms of UPI, Aadhaar, and all kinds of digitalization, which is rather the best and more sophisticated even than most of the, or quite a few of the Western countries, and that has led to the growth and advent of so many services through new thought processes and startups which are thriving on the basis of this Indian IT backbone. Any stock market or any equity market to be particular about is always propelled by two things. One are the fundamentals of the economy, fundamentals of the corporates, and also the flow of funds. When it comes to the flow of funds, as far as India is concerned, the flow of funds by local investors in the Indian stock market is at the strongest level. Whenever the winds of fear were around in the entire world, the Indian investor was not selling their stock. Indian investor, in fact, was buying whatever was available cheap. So there were times before a few months when there was a lot of selling by foreign institutional investors. On the other hand, the domestic institutional investors like mutual funds and domestic investors were buying stocks and balancing out the selling by the foreign institutional investors. In India, the trend of investment through equity-oriented mutual funds and systematic investment plan of investing into those funds is increasing month on month, and that is propelling the market in terms of the local flows. Now, when it comes to the flows from international investors, India, for the reasons which we have discussed in detail, is becoming a preferred investment destination in comparison to other emerging and developed markets. And all the major indices, which are the ones which govern the flow of institutional money, there the allocation of Indian equities or Indian weightage is getting increased. And on account of that, passive flows of funds and even active flows of funds who are tracking those benchmarks and those indices is getting a better allocation on account of that. Well, there are some fears as well when it comes to equities. Equities, as we know, is never a linear kind of progression which happens in terms of its appreciation. Now, let us look at what are the fears. The fears are the valuations of the stocks in certain sectors is quite rich, and they are discounting the future, which is something which every investor who is investing at this level needs to keep in mind. Rajit, in his part of presentation, will also take up as to how should we mitigate this aspect in an effective manner. Now, the another thing which is being feared or which is being actively discussed in the investment arena is that there is a fear and a very imminent global recession. Now, how that global recession is going to impact India and how much India is going to remain insulated is something which is to be seen. Then the interest rate in the Western world is rising, so is the inflation. So if there is an imported interest rate rise, And if there is an imported inflation, that is also going to impact the way the Indian economy is supposed to or expected to go ahead. So this was all about the equity side of investments, where I tried to put forward as to this is the scenario in which the Indian equity landscape is placed. Now, let us go to the fixed income investment scenario. Fixed income investments would necessarily mean that we would get a fixed return on investments into bonds, securities, or maybe fixed deposits with banks. Interest rates in India are on a rise. We saw the table, and they are in sync with the global peers. One encouraging thing about India and the Indian credit system is that the quality of the credit of the Indian central government, state governments, corporates, and all the participants who are borrowing in the banking system or in the debt market is quite strong. Whatever cleanup was required has been done, and all the banks in India are very well capitalized and in a very strong state. As I said earlier, the central government and the state government finances are also in a very strong state. So the credit quality aspect of any investment in India on the fixed income side is something which is not at all an area of concern. Long-term government securities are available at attractive rates in comparison to bank deposits. At least 100 to 150 basis point is the premium which one can avail by investing into government securities rather than investing into bank deposits. What is expected is that this high rates of interest might not sustain for long. So the high interest rate scenario is coming to an end, maybe, or rather nearing to an end. So all those investments which are made in long-term bonds, there might be a mark-to-market gain if the interest rates declines. So one would get a higher interest yield, and also one would get mark-to-market gains if those bonds or securities are held. One concern for all the Western investors was that there could be a depreciation of the Indian rupee, and that eats away the higher rate of return which India offers. But now, for the reasons which we have discussed in detail, it does not seem that there would be a lot of depreciation or a meaningful depreciation of the Indian rupee. So the fixed income return would rather be a real return rather than it becoming a nominal rate of return. The net of tax consideration for any investments into fixed income is a very important aspect. And for all the non-resident Indians, one needs to take into consideration as to which product how it would be taxed in India and in the home country would determine the real rate of return, which is the net of tax of returns. Now, going to the final scenario which I would like to talk about is the real estate investment scenario in India for non-resident Indians. When a country grows, and for the reasons which we discussed, when a country or an economy grows, the real estate sector would also grow and promise a lot of growth. One another thing about India is that the way it is feared in the Western world, that the moment the interest rates are increased, there would be a slackening of demand on the real estate side. In India, the scenario is a little different because most of the borrowings by the home buyers or the real estate buyers are at a dynamic interest rates. So there is a spread which the banks would charge. Over and above that, they would charge a dynamic rate of interest. So my borrowing would be something which I need to pay for on a dynamic basis. So if the interest rates are high today, I pay a little higher for maybe 1.5, 2 years. And then when the interest rates decline, I'll be paying little less. So my average cost of borrowing across a period of 7, 8, 10 years is going to be an average of these interest costs. So this is the way most of the borrowings in India happen. So in that context, one should not be worried on the aspect that there is an increased interest rates and that would impact the real estate sector. One another important thing which has happened in India on the real estate sector front is that now there is a strong regulatory framework in place in the form of a regulation called RERA, and that has organized the real estate sector in a meaningful way. But the fact remains that liquidity and management of real estate continues to be a challenge. And when it comes to non-resident Indians, especially investment, disinvestment, and remittance of proceeds of the real estate are something which requires efforts and time. So for most of the non-resident Indians, we advise them that it is better to invest into financial assets rather than real estate as a preferred route of investment. Well, one can definitely use or rather invest into real estate for self-use, or for the reason that if somebody is planning to relocate to India or might be required to someday relocate to India for those need-based reasons, one might look at investing into real estate. So these were my views on respect of the scenarios, the way the country and the economy is placed, the way the investment into equity, fixed income, and real estate is placed. And now we'll go to the next part of the presentation.
Well, thank you, Mr. Dakshish Kothari, for sharing your views on Indian markets related to such as equity market, real estate market, and fixed income options. The session was very informative, but there were a little bit of hiccups due to some technical issues. But still, we had enjoyed your thoughts on the topic. So now let's move on to the second part of the presentation. And before that, I would like to start with an introductory video of the speaker for the second part of the presentation, CA Mr. Rajit Kothari.
Mr. Rajit Kothari is the Executive Director of Ashutosh Financial Services Private Limited, which is an ISO 9001-2015 certified company with prominent presence in the field of financial services. He is a chartered accountant and a certified financial planner by qualification. Further, he has graduated in the field of commerce with specialization in banking, financial services and insurance sector from Ahmedabad University, and has also pursued post-graduation in the field of law. He started his journey with Ashutosh Financial Services Private Limited, where he played an instrumental role in functioning of several business development activities of the company. He also played a vital responsibility in the development of exotic product offerings for the company in the alternate investment arena such as foreign equity and unlisted stocks. Moreover, he was instrumental in the preparation of extensive knowledge database on different topics concerning taxation and finance for the company. Thereafter, he worked with Messrs. Deloitte Haskins & Sells LLP, one of the leading global consulting firms at Mumbai, focusing on tax and regulatory compliance for high net worth resident and non-resident individuals. He is an expressive public speaker and addresses professional forums on diverse topics related to finance as well as other topics of national importance. He has participated in international exchange program as a student and has also attended management development programs across top business schools in India. As a young and dynamic director with a multi-skilled personality, he presently concentrates on exploring innovative business opportunities through geographical expansion, digital proliferation, and concentric diversification of the company.
Over to you, Mr. Rajit Kothari. Thank you.
Hello, everyone. It is great to see all of you back again in this second event of our NRI Financial Conclave. Moving to the second part, which is investment opportunities for NRIs in present day India, I will be talking about the different products or the different opportunities of the same topics that we discussed in the earlier part, which is equity, fixed income, and real estate. Let us start with the avenues for investment into equity market for non-residents. The first and foremost, mutual funds. Now, most of us know what are mutual funds, or many of us have already invested into mutual funds. They are instruments which are driven by professional fund managers who are backed by reputed global fund management companies. Now, these mutual funds offer diversification, not just into stocks, but also different sectors, which is very important in today's times of dynamic economic movement. Many stocks, many sectors which were of great significance in the past are no longer relevant today. And with the emergence of new characteristics in the economy, there are several new sectors which are coming up, which needs an allocation. So agile fund management is very important, which is an important aspect of mutual fund. Being non-residents, it is at most important to have ease of operations in terms of the digital processes, digital bandwidth for execution of these investments seamlessly from any part of the world, which is possible in case of mutual funds today with the advent of technology. Taxation, which is also another very important aspect, is quite simplistic, quite straightforward in India, because that is only triggered in the time of sale when the units are transferred. And in most of the jurisdictions across the world, the taxation is similar, except in US, wherein the taxation for mutual funds is on a notional basis, meaning the investor is required to pay tax on the market movement of the mutual funds, irrespective of the transfer of the units. There is a wide choice for investors in mutual funds, depending upon the investment horizon, the investment objective, the aggressiveness with which the investor wants to invest in mutual funds today. What we have often observed in case of existing investments into mutual funds is that non-residents often invest on a random basis. They participate in new fund offers of mutual funds. However, what we advise is the prudent manner of investing through a well-designed portfolio, which is with a balanced approach of investment into all these different kinds of schemes, which could be large and mid, flexi, so on and so forth. Further, the concentration of asset management companies is also very important, because every asset manager has got a different style of investing. So it is important to have the blend of all the different kinds of asset managers, so that we do not miss out on the investment style of any of them. Quartile performance monitoring. Let me explain what are quartiles. Whenever we divide the ranking of mutual funds, the entire basket of mutual funds, into 4 parts, it is referred as quartiles. Now, it is very necessary for our mutual fund, the ones in which we have invested, to be in the first or the second quartile. There could be times wherein the fund is not performing, is not in the first 2 quartiles. However, this requires continuous monitoring of the investments, and if it consistently underperforms and is not in the first 2 quartiles, then rebalancing is required in the investment portfolio. The investment strategy has to be planned on a systematic basis over a period of time. As we discussed in the earlier part of the presentation, whenever we feel that the valuations are above its intrinsic value or the value at which it should be invested, it is best and prudent to scatter it over a period of 4 weeks to 5 months or 6 months, so that the cost of acquisition is averaged across these periods, and we do not end up entering the market at a wrong point of time. Investing in portfolio management services. This is another avenue of investing in equity market wherein a bunch of equity shares is developed by the fund manager with appropriate diversification of stock. The taxation is quite simple. There is no notional taxation like a mutual fund for US tax residents in this case. And the fund manager builds a separate stock portfolio with the demat account of the individual investor. The advantage of this over a mutual fund is that the inflows and outflows of other investors are not impacted. I mean, the investment of the investor is not impacted with the inflows and outflows of other investors because, as I mentioned, that there is a separate segregated demat account with individual bunch of stocks for each investor. Well, in case of a mutual fund, it is a pooled investment vehicle. So inflows, outflows do impact the investment of the investor. Further, there are reduced number of restrictions by the regulator SEBI in case of investment into EMS, and the minimum ticket size of investment is 50 lakhs of rupees. We have observed that investment in PMS is often done without appropriate peer comparison or comparison of different PMS schemes. There are several options which are available just as a mutual fund, and an active portfolio, a well-balanced portfolio with an appropriate allocation into all the necessary schemes should be made. And it is also possible to diversify the investment of the same PMS into different kinds of schemes. For example, if someone is investing the 50 lakhs of rupees, that can be segregated into three bunches of say 20, 20 and 10 lakhs of rupees into different schemes, depending upon the risk appetite and the investment horizon of the investor. Similarly, if the investment does not perform over a period of time, then that can be seamlessly transferred into another scheme of the same fund manager, same PMS, without any major operational hassles. Unlisted stocks. Now, NRIs across the world know that India is a land of opportunity. And this opportunity is not just confined to the listed market, but it exists way beyond that, which is the unlisted market. The advantages of investing in unlisted market are obvious. As the saying goes, catch them young. Investing in unlisted market gives the early mover advantage or the first mover advantage to any investor to enter at the right valuation or at a very attractive valuation, so that multi-bagger or returns in terms of times like 3x, 5x, 7x can be fetched through these kinds of investments. We all know that when the unlisted stock comes for a IPO, approaches the capital markets, the story is quite evident to the world at large, and it is factored in the price. So the valuation, the juicy valuation at which the investor can enter is no longer there. So it is best to participate in this unlisted stocks at an attractive valuation and fetch the best returns. Now, today in India, there are several stocks which are available in the unlisted market. However, it is utmost important to figure out and to narrow down upon the right quality unlisted stocks basis all these parameters that we have mentioned. Promoter naturally is the one who backs the company, so the background of the promoter is very important. The financial track record of the company is also important. The business should be futuristic. It should be a sunrise sector. It should not be a sunset sector, which does not have any future. The business should have some competitive advantage, which is called as moat. And the chances of it going for IPO in the near future should be visible so that the investor has some exit opportunity. At the same time, the investor should have the comfort of holding the investment over a relatively longer period of time, because there could be scenarios wherein the company might not go to the capital markets in the near future, so for whatever reason. Now, basis our research on all these parameters, we have narrowed down in these 5 unlisted stocks, which we feel are quite worthy of investing. Starting with NSE, National Stock Exchange. It is one of the largest stock exchanges in the entire world and has a monopolistic share over the Indian capital markets as far as equity and derivatives trades in India are concerned. It is the technological bandwidth of executing up to lakhs of trades in microseconds. Now, it is near to impossible to replicate this kind of a stock exchange in India, which is a clear moat of that company. Reliance Retail. Reliance Retail is one of the flagship companies of the Reliance Group and is one of the fastest growing retail companies in the entire world. It has plans to expand multifold in the next few years and has got the digital presence and the physical network of outlets across India, thousands of outlets across India. Tata Technology is another prominent company of the Tata Group, which provides technological solutions to several automotive companies across the world. And the two other companies, HDB Financial Services and HDFC Securities, are two prominent groups into lending, NBFC, which is HDFC Financial Services, and HDFC Securities, which is a broking company of the HDFC Group, which are also quite worthwhile investing. We can provide detailed information of these companies in case if any of the non-resident is interested to invest. Another innovative means of investing today is the alternative investment fund, which has picked up in the recent time, which is a structured way of investing into all these different kinds of asset classes. It could be listed, unlisted stocks, fixed income, and other derivatives. However, what we suggest is this should be AIF route should be opted for investing in unlisted stocks because there are several other options of investing in all other asset classes. Now, needless to say, these AIFs are backed by highly experienced fund managers who have got an excellent connect across the industry and a track record and are very reputed. The minimum ticket size here is 1 crore of rupees, which is payable in 2 to 3 tranches. And the investment horizon, the period is 5 years and which could extend up to another 2 years depending upon the discretion of the fund manager. Now, why do we suggest or why do we recommend participating in unlisted stocks through AIF? The two major concerns that normally not just non-residents but all the investors have are one, which unlisted stocks to invest in. Since unlisted stocks are not open to public eye, we do not know so many features of these companies. So all these fund managers have got that not just skill, bandwidth, but also connect across the industry through which they can figure out and pick out right quality unlisted stocks to invest in. New age startups could be any kind of such businesses which could be of a great potential. Second is the price. Since many of these companies are loss-making companies, it is very difficult to identify the right price at which it should be invested. So all these AIFs work on globally accepted valuation models, which help in determining the right price at which the entry or the investment should be made. So since both these important concerns are addressed through AIF, it is prudent to invest into unlisted stocks through this route. Moving to the second part, which is investing in the fixed income basket for non-residents. As we looked at equity-oriented mutual funds, there is another category of debt-oriented mutual funds, similarly by reputed AMCs, which have got target maturity funds. Now, these funds have got a target yield to maturity of around 7% plus. So they invest in certain securities, certain debt-based instruments, which fetch these kind of a return, attractive return, with a horizon of up to 7 years. As we looked at the earlier part of the presentation, that we are now entering a falling interest rate environment, and the interest rate have reached a level beyond which it is very difficult to rise beyond this point now. So in cases when the interest rate falls with the monetary policy of the RBI, there are all likely chances that it could result in the increase in the value of the security of the investor, which will result into mark-to-market gains, because of which the investor can earn beyond what is expected, beyond the YTM, because of this movement of the interest rates. So at this point of time, this juncture in the monetary policy scenario, the interest rate environment, it is very worthwhile to invest into these kinds of target maturity funds to get these kinds of mark-to-market gains over the next few years. Further, the rate of taxation is also concessional of 10% in case of non-residents on long-term capital gains when the holding period exceeds 3 years. A very traditional approach of investing which is through fixed deposits of banks as well as certain other corporates. NRI fixed deposits, as we all know, are tax-free and the return is assured. Similarly, are FCNR deposits, which can be invested in case any volatile movement on the foreign exchange front is predicted. And the interest is also tax-free in this case. However, this interest might be tax-free under the Indian income tax law, but in case of the home jurisdiction, the home country of the non-resident, this could be taxable. So that factor also needs to be considered in case of investing into these kinds of tax-free instruments in India. Then there is another planning which can be done against these kinds of investments into NRE and FCNR deposits. One can invest in these deposits on tax-free interest and then borrow against these deposits and invest into some equity market instrument or commercial ventures and avail deduction of borrowing on these instruments. So there is a dual advantage. One is the tax-free interest which is on, and secondly, deduction of the interest on the borrowing is also on, and that can be invested into other avenues like the equity markets, mutual funds, or some commercial ventures which can fetch much better returns. If someone wants to earn a little better interest than these NRE fixed deposits, then corporate fixed deposits with reputed companies can be parked to NRO bank account, which can be taxable, but when the investor does not have any major taxable income in India or has very less amount of taxable income in India, and it is worthwhile to explore this corporate fixed deposits so that better rate of interest can be obtained, and these funds can be repatriated under the $1 million from the NRO to NRE bank account, and then can be repatriated to the NRE bank account across the world. We have outlined the present interest rates offered by reputed banks in India, which comes to around 6 to 7%. Similarly, we have also outlined interest rates to the corporate deposits of reputed companies, namely HDFC and Bajaj Finance, which offer a better rate of return in the range of 6.5 to 7.5%. And there is extra 0.25% for senior citizens. Another important avenue for fixed income investments is guaranteed return insurance plan. Under these plans, investments will have to be made over the working life of the individual, which could be 5, 10, 15 years. And then the proceeds, the maturity proceeds can be availed as per the discretion of the investor. This can fetch a return of 6% plus, which is tax-free, and deduction of the premium payment of 1,50,000 rupees under Section 80C can also be availed. On the top of everything, there is the life insurance cover, which can extend to over the entire working life of the individual, right from beginning of the policy till the beginning of maturity proceeds. Now, this can be a wonderful retirement planning strategy because the investor, the non-resident, can keep investing in India across the working life, can avail the term life insurance, and can then get the benefit of the maturity across his lifespan, which can extend up to his entire lifespan and can earn a good retirement corpus out of it. So this is a wonderful retirement strategies for all the non-residents who are planning to relocate to India in the future. Moving to the last aspect, which is investing into real estate, which has been a very popular means of investing for non-residents. Non-residents across the world would be aware about real estate investment trusts, which are very popular avenues of investing into several large public infrastructure projects across the world. And similarly, that trend is also picking up in India in the recent times. These REITs invest into class quality real estate projects, and the units of this are listed on the stock exchange. So this ensures liquidity of investment, and the appreciation is based on the change in the net asset value of these units, and there is a scope of earning rental income on these investments. In the recent budgets, the taxation on these REITs has been rationalized, And now the proper tax regime has been developed for all the unit holders of REITs. As we had earlier pointed, it is not worthwhile for a non-resident to invest in real estate structurally in India. It makes much better sense to invest in financial assets over real assets for various reasons that we have discussed. However, if non-residents want to invest in real estate for own use, there are several factors which need to be considered. First being, in case of a developed real estate, the property documentation has to be verified. In case if it is under construction or not developed, then the credibility of the builder or the developer has to be taken into consideration. And the location is very important considering the convenience and feasibility of the non-resident. And of course, needless to say, the management and the safekeeping of the property is also very important. And since it is a sizable chunk of investment, the appreciation point, the perspective should also not be ignored. That is also something which is very important. And the property should be in a condition that letting out is possible. Another avenue of investing is commercial real estate, which could be a warehouse, shop, office, showroom, something like that. In this case, the rental yield and the appreciation prospect should be considered because it is purely from the investment perspective. Of course, the liquidity is also important because at any point of time, if the non-resident investor requires funds, then the property should be in a marketable position so that funds can be repatriated. And this is suitable for NRIs who are frequently visiting India, have got good connects in India, who can take care of the management and safekeeping of the property. And institutional letting out, that is letting out to some good quality corporate, is ideal so that the property is in safe hands at all points of time and is in a marketable state. There is a planning which can be done for investing in these kinds of real estate properties. As we had earlier pointed out, that funds can be invested into these NRI, FCNR deposits, and borrowings can be raised against these kinds of deposits, which can be invested into these properties. So there is a dual advantage. One is the tax-free interest which the investor can earn, and this interest is reduced from the rental income by computation of the net taxable income from this rental property. So there is a dual advantage, and any investment for that matter should be planned similarly from not just the investment perspective, but also taxation and regulatory perspective. And yeah, so this brings us to the end of the presentation. This is a general disclaimer that we are not planning to give any kind of professional investment advice. Wherever we have used some kind of external data, we have provided the links and the references. We have organized the further physical presentations on the topic of myths and truths from taxation and regulations perspective, as well as investment perspective, because we often observe that there are several myths that so many of the non-residents have across the globe. So we plan to clear these myths and give a clarified, a crystal clear understanding by meeting all of you in person. So we would welcome all of you to participate in these events or your relatives, so that we can interact personally over lunch or dinner. And we look forward to see you there. In case you have not registered for these events, please do register. We thank you for being a part of this event, and we further go ahead with the question and answer session.
Sure. Hello, everyone. Thank you, Mr. Rajit Kothari, for the wonderful session. And in the session, you had highlighted with so many options of investments available for NRIs in India. And now let's take some queries and questions. We are having some questions in the chat box, and I have received some WhatsApp as well. So if anybody wants to directly interact, then please raise your hands, and our person will unmute the participant, and then they can interact with the speakers. Okay, so the first question that I have received on my WhatsApp number, that is regarding with the depreciation of rupee, whatever gain is there is wiped out. Is still worth it, also considering inflation rate? There is degrowth of the investment. Whether it is still worth investing in India?
Should we start? The question is very, very valid considering the recent depreciation in the Indian rupee vis-a-vis the US dollar, which we saw. However, in the current scenario, what we feel, considering the economic outlook and the differential in the inflation rates across India and US, is that the further chances of depreciation are quite low. As we know, the reason for this depreciation is basically the difference in the inflation between two economies. Now, when we saw that the difference in the inflation at this juncture is hardly 1 or 2%, the chances of further fall or the depreciation in the currency at this point is quite minimal. So at this point, it is very worthwhile. It's quite worthwhile for any non-resident to invest in the Indian markets so that the best returns can be expected out of the equity or any avenue that he or she is planning. And at the same time, the loss in terms of the erosion in value in terms of currency depreciation is reduced to a minimum extent.
Okay. The next question is in the chat box that is related to HUF. So if a resident individual is becoming an NRI, so then after whether he can continue holding that HUF bank account and the investment that has been done through that identity.
One can continue definitely holding the HUF account because that person who was a Hindu will remain a Hindu. And under the Indian regulations, one can definitely hold a Hindu undivided family account in India. And the status of that account is going to be an NRO account status. But if somebody, say, for instance, in the USA, so there one needs to check as to how these incomes of the HUF would be taxed. In our understanding of whatever we have got the information on the US law is that if the funds from the individual are transferred to the HUF at any point of time by way of some loan or by way of some partition or something, then it is considered as a grantor trust and it is taxed accordingly in the US. And if it is out of its own funds, the HUF has its own funds out of its own income, then it's a non-grantor trust. So when it comes to its taxability outside of India is something which is an area one needs to look into. In India, one can continue to hold HUF as an account, as an entity, irrespective of the fact whether that person is a resident or a non-resident.
Okay, perfect. Thank you. Now the another question that is related to mutual fund and which is I think it is related to the operational side of the mutual fund, whether an NRI can invest into mutual fund without visiting to India. Can we do it digitally?
Investment into mutual funds is seamlessly possible from any place in this world. So that is very much possible through the digital media. And the NRI need not visit India to execute any sale, purchase, or any transactions.
Okay. And the another question is related to investing into US markets, especially into the technological stocks, as the market has been declined this year with the huge percentage. So whether still it is worthwhile to invest into US techno stocks?
In our view, the way the corrections have happened on the technology stocks in the US and in India, and now as the querist is talking about the technology stocks in the US, there has been a very sharp correction in the big tech and the other technology stocks, which are SaaS and ITES and other stocks in the US. And we see that whatever was the advantages which one were looking at in terms of why one should be investing into technology, still they remain. Maybe in an intervening period of 1 or 2 years, maybe there is a certain level of contraction of the economy. But these companies are global companies. Say maybe a big tech company, they have their market across the globe. They have their market in a country like India, which is less impacted on account of the economic downturn. So their market is global. So whatever is the mood as of now on the technology stocks is a time, in our view, to get into and enter into these technology stocks.
Okay. The another question is, can your company analyze and review existing investments in India of an NRI and suggest ways of improvement?
We can very well analyze the existing portfolio of any non-resident.
Rajat bhai, your voice is not audible.
Now?
Can you please repeat the answer?
Sure.
Again. Yeah. Sorry, there is a disturbance in the line. I think Rajat bhai, are you there? Okay. Participant, please allow. Yeah. Okay. Okay. Yes, Rajat bhai, can you hear me?
Yes, yes. Am I audible now?
Yes, your voice is audible now. Sorry, but you need to repeat the answer again.
Sure, sure, sure. So we can very well study the existing investment of any NRI investor, and we can suggest ways of improving that, be it any kind of investment into any instrument. And we have an in-house research team which can carry out a thorough analysis of the investment and can suggest ways of improving the investment as well.
Okay. I'm having a couple of questions on my WhatsApp. So one of them is there a way for an NRI to generate guaranteed regular income in India for retirement planning?
Absolutely, there is a way which we had also pointed out earlier in the presentation, which is through investing in a guaranteed return insurance plan. Under this plan, the investor can invest in different installments depending upon his working life, which could start from 5 years and extend up to 15 years and beyond. And then the maturity proceeds can be adjusted in a way which is as per the retirement needs of the investor. Along with the redemption of the maturity proceeds and regular income, there is a life insurance cover which exists up to the redemption or the maturity proceeds beginning. So there is a dual advantage which any NRI investor can avail for retirement, which is life insurance along with guaranteed income. And this income is tax-free in India and has a assured return for a very, very long period, maybe across the entire lifespan of the investor.
Okay, great. That is interesting. Now, the last question I'm having on my WhatsApp, that is there any way to invest in new age Indian businesses to fetch the best returns in long term?
Definitely, there is a way to invest into unlisted stocks, as we pointed out, which is through both the avenues. One is through directly investing into good quality unlisted stocks, which we pointed out by carrying a thorough research, which any investor, NRI investor, can invest through this NRO bank account. And the second is through investing into the alternative investment fund, which of course has a high ticket size, but has chances of investing into good quality startup companies, new age businesses, as the question points out.
Okay, great. I think we are done with the questions. If anybody wants to interact with the speakers, then please raise your hand. Okay, then we have come to the end of the session of the presentation. So we thank you all for your kind support and joining us for this webinar. The recording of this presentation will be available on our YouTube channel, that is Ashutosh FinServe. Also, we are excited to share our upcoming series of physical presentations for NRIs in Mumbai, Ahmedabad, and Rajkot. Here with sharing, I have already shared the detail of the presentation and the registration form in the chat box. Please do register yourself. Looking forward to see you there. Thank you. Thank you so much.
Thank you. Thank you very much. Thank you.